$100. That's it. That's all you need to start building real wealth. Not $10,000, not a finance degree, not a stockbroker in a fancy suit. Just $100 and the knowledge of what to do with it. And yet most people your age are sitting on the sidelines, convinced that investing is for rich people, older people, or people who understand things like PE ratios and yield curves. I'm here to tell you, that's completely wrong. In the next 10 minutes, I'm going to walk you through exactly how to start investing with $100, step by step, from zero. No jargon, no fluff, just a clear, simple plan that you can execute this week. Let's go. Welcome to Finance Simple, where we take complicated money concepts and make them actually make sense. If you're new here, subscribe now, because every week we put out content designed specifically for people in their 20s and 30s who want to build real financial freedom without needing a Wall Street background. Today's video is one of the most important ones we've ever made, because the single biggest wealth-building mistake people make is waiting too long to start investing. Every year you wait costs you thousands, sometimes tens of thousands, of dollars in missed compound growth. So today, we fix that. Here's exactly what we're going to cover. Step 1, and this is mindset before money. Understand why $100 is actually a powerful starting point. Here's what most people get wrong. They think they need a lot of money to make money. That's the old way of thinking. Today, with apps and fractional shares, you can invest in Amazon, Apple, or an entire index of 500 companies for as little as $1. But more importantly, starting with $100 right now is better than waiting until you have $1,000 later. Why? 2 words: compound interest. Let me give you a real example. If you invest $100 today at a 10% average annual return, which is roughly what the S&P 500 has historically delivered in 30 years, that $100 becomes over $1,740. That's your money growing while you sleep, while you work, while you live your life. Now imagine if you add even $50 a month on top of that. After 30 years, you're looking at over $100,000 from $50 a month. The math is on your side. Time is the most powerful investing tool you have. And the earlier you start, the more of it you get. Step 2, before you invest a single dollar, do a 30-second financial check. Here's the thing, investing is incredible, but it's not the first step if your financial house is on fire. Ask yourself 3 quick questions. 1. Do I have at least $500 to $1,000 saved as a basic emergency buffer? If no, build that first before investing. 2. Do I have high-interest debt like credit card debt above 15% interest? If yes, pay that off first. That debt is costing you more than any investment can earn you. 3. Can I afford to leave this $100 alone for at least 3 to 5 years? Investing is not a savings account. Markets go up and down. You need to be okay leaving the money in long enough for it to grow. If you answered yes to all 3, you're ready. Let's move to step 3. Step 3, open the right account. This is where most beginners freeze. There are so many options: brokerage accounts, Roth IRAs, 401ks, robo-advisors, it's overwhelming. But here's the simple breakdown for someone starting with $100. If you're in the US, your best first move is a Roth IRA. This is a retirement account where your money grows completely tax-free. You pay taxes on the money going in, but when you withdraw it in retirement, 0 taxes. It's one of the best financial tools available to young adults, and almost no one uses it early enough. The annual contribution limit is $7,000 in 2024. For $100, you're nowhere near the limit, so start here. Now, where do you actually open one? 3 beginner-friendly platforms that have 0 minimum deposits and commission-free trades: Fidelity, Charles Schwab. And if you want the simplest experience, a robo-advisor like Betterment or Wealthfront that does everything for you automatically. If you're outside the US, look for an ISA in the UK, a TFSA in Canada, or a low-cost brokerage like Trading 212, DeGiro, or Interactive Brokers, all available in most countries. Pick one, open the account. It takes about 10 minutes, and you'll need your ID and bank details. Step 4, and this is the one everyone wants to know: what do you actually buy? Here's the honest, simple answer for a beginner. Don't pick individual stocks. Not yet. I know. You've heard about people making 10x on Tesla or Nvidia, but for every person who wins big picking stocks, hundreds lose money. As a beginner, your goal is not to get rich overnight. Your goal is to grow steadily without blowing up your money. So what's the best option? Index funds and ETFs. An index fund is essentially a basket that holds hundreds or thousands of stocks at once. When you buy one share of an ETF like VOB or SPY, you instantly own a tiny piece of Apple, Microsoft, Amazon, Google, and 496 other companies all at once. You're instantly diversified. The most popular choice for beginners is VOB, the Vanguard S&P 500 ETF. It tracks the 500 largest US companies. It has one of the lowest fees in the world, just 0.03% per year. And historically, it has returned an average of about 10% per year over the long term. With $100, you can buy fractional shares of VUO, meaning you don't need the full share price, just one or more. Set it, leave it, and let the market do its job. That's it. That's the strategy that has made more ordinary people wealthy than any other approach in history. Quick pause if this is making sense and you're learning something new. Drop a comment below and tell me, are you investing already, or is this your first time thinking about it? I read every single comment and I'd love to know where you're starting from. Now let's keep going. We're getting to the part that most finance channels skip. Step 5. How to actually grow your $100 into real money. Here's the secret that no one tells you. Your first $100 is not about the money. It's about building the habit. The most powerful thing you can do right now is set up automatic monthly contributions, even $25 a month, even $10 a month. Here's why this works so well. First, it removes emotion from investing. You're not trying to time the market. You're just buying every month no matter what. This is called dollar cost averaging, and it's one of the most effective strategies in personal finance. When the market drops, your fixed amount buys more shares. When it rises, your shares are worth more. Over time, it balances out in your favor. Second, it builds a habit that compounds, just like your money does. Let me show you what $25 a month looks like added to your initial $100 at a 10% average annual return. After 1 year, about $425. After 5 years, about $2,000. After 10 years, about $5,200. After 20 years, about $19,000. After 30 years, over $57,000. From $25 a month. Now increase that to $100 a month as your income grows. And after 30 years, you're looking at over $200,000. This is how ordinary people build extraordinary wealth. Not by picking the right stock, by showing up every single month. Step 6. The 3 mistakes that will destroy your investment journey before it starts. Mistake 1. Panic selling. The market will drop, I promise you. It dropped 34% in March 2020. It dropped 50% in 2008. Every single time, it recovered and went higher than before. The people who lost money were the ones who panicked and sold at the bottom. The people who stayed calm and kept buying, they made a fortune. Mistake 2. Trying to pick individual stocks before you understand the basics. Individual stocks are volatile. A single bad earnings report can wipe out 30% of your investment overnight. Start with index funds. Build your knowledge. Then maybe explore individual stocks with money you can afford to lose. Mistake 3. Checking your portfolio every day. This sounds harmless, but it's one of the biggest killers of long-term investing success. When you check daily, every dip feels like a disaster. You make emotional decisions. You sell too early, buy too late. Set your investments on auto, check once a month at most, and let time do the work. Successful investing is boring. That's a feature, not a bug. Step 7. Your action plan. This week. Not someday, this week. Here is exactly what to do. Monday, open a Roth IRA or brokerage account on Fidelity, Schwab, or Betterment. It takes 10 minutes. Tuesday, link your bank account and deposit $100. Wednesday, buy fractional shares of VUO, the Vanguard S&P 500 ETF, with your $100. Thursday, set up an automatic monthly contribution, even $10 or $25, to keep adding to your investment automatically. Friday, go live your life. You've just done what most people your age will never do. You started. And that's the hardest part. From here, you just keep going. Increase your monthly contribution whenever you can. Reinvest any dividends. Don't touch it. In 10, 20, 30 years, you will look back at this week as one of the best financial decisions you ever made. The best time to plant a tree was 20 years ago. The second best time is today. And that's it, a complete beginner's guide to investing with $100. Let's do a quick recap. Step 1. Understand that starting small and starting now is powerful. Step 2, make sure your financial foundation is solid first. Step 3, open a Roth IRA or brokerage account. Step 4, buy a simple S&P 500 index fund like VUO. Step 5, automate monthly contributions to grow your wealth consistently. Step 6, avoid the 3 big mistakes: panic selling, stock picking too early, and checking daily. Step 7, execute your action plan this week. If this video helped you, please hit the like button. It genuinely helps more people find this content and start their investing journey. Subscribe to Finance Simple for a new video every week, and drop a comment telling me, what's your biggest question about investing? I'll answer in the comments. See you in the next one.